1,000 days of lessons for discipline, 10,000 days of lessons for mastery. Miyamoto Musashi, the most famous of the Japanese samurai and swordsmen, and he has a lot to teach us. It takes time. It takes discipline to learn how to do things well. Markets demand the same things if you want to learn how to read these charts. Let's jump into what we have before you today. We have, of course, as we look at these markets, we can see that the S&P 500, the NASDAQ 100 are up a little bit for the day. Bonds are down about 1%. Gold is up about 0.5%. What do we see going on? There we go. I wanted to take a look at the 2-day because it looked a little strange. But if we look at our weekly chart, we can see that as we start the week off, we have a red open box candle that is drawing up just a smidgen for the day. We have pretty much a laminated at this point price percent oscillator. What is this showing us over the last 3-4 weeks or so, going into maybe the 4th week? That we have lots of indecision in the marketplace. Yes, we have what many people are saying one of the most important presidential elections ever, perhaps, when it comes to the economy, where America is going. And of course, one could expect that the market might be in flux over that. Not surprising. But what do we see? Well, we see price is above our weekly trend line. We go to the 2-day chart. And of course, we see that the 2-day trend line, it was only connecting 2 candles, has been broken. Now, that prior trend, well, we saw things change on the Thursday, Friday of last week. Now we have the Monday, Tuesday, another spinning top. We see that price is moving down as far as the price percent oscillator and the derivative oscillators go. Still positive. We look at the half-day chart. It is still trundling down, has not crossed back over going up. Price is, and again, we'll try to redraw as best we can that half-day trend line, however we might draw it. Again, not easy to do it in any of these cases. Again, showing us that we've got lots of indecision in the marketplace. That 4-hour chart or half-day 195-minute chart still heading down. Look at the price percent oscillator heading down. Derivative oscillator is flat. So again, we see that the 2-day is still confirmed up. Weekly is right there laminated on it. So again, for those of you, again, we gave that cautionary note with that weekly vertical crossover on Friday. As weak as it was, we still see that half-day chart way away from crossing over going up. So those of you who held out, I don't blame you. We'll continue to watch and see how things sort out in crazy times like these. Remember, first rule, don't lose money. Second rule, make money. Let's go to the Qs. What do we see going on there? Well, price percent oscillator still negative. Derivative oscillator losing downward momentum. A red open box, which means a slowdown in the up movement. Somebody asked me in a question, I believe it was on the YouTube channel, they had listened to the training that we have. I'll put it the end of today's training also on the Heikin-Ashi candlesticks. I think 180,000 people have taken that training. I will put it at the end of today's video so you can take it too if you've not had it. But what do the open box red as opposed to green? Green means a green open box means strong up movement. A red open box, as you can see, means a slowdown in the up movement, not down movement, but a slowdown in the up movement. Solid red means acceleration of down movement, and you can also find occasionally a solid green like we saw there on the weekly candle ending the 27th of March of this year. That means a slowdown in the down movement. Many times it can portend a change in direction. So pay attention to those solid green or those open box red candles. They can give you warnings. Well, what we see on this weekly is, again, a slowdown in that up movement. 2-day chart hasn't crossed over going down yet. Told you to keep a close eye on that. Now, it did not cross over. This represents Monday and Tuesday, the latest one. It's a red spinning top. So again, if over the course of Wednesday and Thursday, at the close of the two-day candle this Thursday, you have a crossover going down, that would be a two-day recross and the opportunity potentially to jump into a down move on the NASDAQ 100. What do we see on the half-day chart? Moving down, we see the price percent oscillator again shows us down movement. Accelerating derivative oscillator about flat. We see down movement in the morning and then a bit of a pull, a slowdown in that down movement in the afternoon. Note that we did not hit the lows that we hit on Monday afternoon. So again, watch, pay attention, see how this continues to develop. That's where we are on stocks. And again, don't get worried if things aren't doing what you expect them to do. Do what you see the charts do. That's what's most important. We go to 20-year bonds. What do we see going on there? They are down for the day 0.95%. Now remember, we have seen bonds again. We had that weekly, let's make sure we're in the right spot. We had that weekly vertical crossover way back. I had to go way back in time, didn't I? Back to May the 22nd. We have not left that. We saw things go down for 2 weeks, then up for several weeks, then moving back over, bouncing off the red signal line and heading down again. They went down for 4 weeks, then sideways, and then started moving down again when we had that two-day recross going down. Now again, what's important to note is we still haven't reached the low that we hit back the week after the two-day recross, the week ending after that two-day recross. We see that we haven't reached the low that we hit on the 9th of October, the week ending then. We do have another red down candle forming. Maybe it'll hit that low. We see the price percent oscillator moving down, derivative oscillator. Go to that two-day. We can explore that a little further. We see that two-day recross. Things moved down for 4 more days, but actually plumbed the low there on Tuesday the 6th, and then consequently moved up for 4 days, and then started moving down again on Monday. So we'll continue to watch, see what there is. We can see that price percent oscillator just cranking over, going down with the latest two-day candle. Half-day chart shows us that we, of course, did have a 4-hour, or sorry, old habits die hard, half-day crossover going down in the morning on Tuesday the 20th, and then more down movement in the afternoon. So we'll continue to follow that. That was a half-day recross going down. So we'll see how long that occurs. Of course, as I told you guys, I encouraged you to potentially practice trade that, to learn what there is to learn about that shortest of all the charts that we use. Typically don't like it. What I find over and over again is, of course, the best are our weekly vertical crossovers. Next to that are two-day recrosses. And again, you backtrack to learn what charts those work best on. And then, of course, the least favorable are the smallest of all of our waves, that half-day or 195-minute chart. Lastly, we go to gold. Gold up for the day, 0.48%. Look at gold. It is just sliding sideways, sideways, sideways. The derivative oscillator is a little less than flat. Price percent oscillator still heading down, forming pretty much a little doji for the week. Lots of indecision. Go to the two-day chart. We can see that we have a green up candle reaching about where it reached in the prior candle for Wednesday the 14th. That represented Tuesday the 13th and Wednesday the 14th of last week. So again, a real sideways slide we see going on. Price percent oscillator flat. Derivative oscillator moving over to green. But now remember, the weekly's in a confirmed down move. The 2 days still in a confirmed down move. We go to the half-day chart. What do we see there? popped over in the morning. Look at how it has flipped back and forth, bouncing off the red signal line, over, back up. Again, just crazy. Not much going on in the morning, but popped up in the afternoon. So that is where we are as far as gold goes. Again, crazy times, but folks, that's the way it is. We got to wait for these markets to sort themselves out for us. We will let the charts lead us. They'll clear up. Remember how great the summer was this year? Summer is usually the dead time of year. Well, now it's getting to look a lot like summertime with this upcoming election, and we shall continue to chart the markets. Stick with us through thick and thin. The more difficult it is, my friends, the more you will learn if you will practice. Put together your daily market worksheets every day, your trade worksheets always, and once a week, your weekly market worksheets. We have training at the channel that shows you how to fill those out. They're pretty self-explanatory. Plus, they're free. They're in your show notes every day. If you're not a subscriber, go to chartingwealth.com, sign up. You'll get the PDFs every day in your show notes, plus the special trainings we have for you. We've got a great training for you today. Liquidity, a key to your success. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.